guys, and welcome back to a new episode of Koshkah'S Trading Academy. Today we're gonna see how to trade continuations versus reversals and how you can implement that into your own trading. So let's start right now. So first of all, we need to understand what is a reversal and what is a continuation. First things first, let's start with these two scenarios. We all straight away know that we have multiple trends in trading. We have the uptrend when price is pushing to the upside, as you can see right here. You have as well the downtrend when price is pushing to the downside, exactly right here. And you have as well the consolidation phase, or some people as well call it the ranging market. So this is when basically we're not going to the upside, neither to the downside. Now, when you're trading continuations, this means that you are overall already set for your trend. So in this case, as we are obviously bullish, we already know that we're breaking structure multiple times to the upsides with break of structures right here. So as we are overall bullish, you will be looking for overall buys, as we are overall pushing to the upside. As we are bullish, you will not look for sells. That doesn't make sense, because as your ranges are bullish, price will most likely pull back and then continue in the initial direction. So when you're looking for continuations, this is when you're continuing to trade in the same direction that the market is. However, when you're looking for reversals, this is when it gets tricky, because overall, let's say price overall is bullish, right? However, sometimes it might happen that we have a break to the downside, as you can see right here. So this is a change of character. So we might break structure to the downside, and then we might continue to be bearish, so we might have right here a reversal. Now, how do we trade this movement right here? Because obviously when it's bullish, it's easy, you just follow the price. But what happens when you are reversing? In this video, I'm gonna show you what you can look for when you're looking for reversals and what you can look for when you're looking for overall trades. So first of all, how do you identify a reversal? But before doing that, let's first of all see how do you identify your ranges. So first things first, for you to identify your range, it's quite simple. You need to understand where is your last two break of structures. So let's say, for example, we have this bullish market structure. You have a range between a low and a high. So low, high, low, high, low, high. So every single low and high, you have a trading range in between this low and this high. And when you have a break of structures, when a high is broken and we create a new high, this is when you have a switch in the trading range. So in this case, your trading range was from this low to this high. So everything that was going on between this high and this low, so everything right here was inside your trading range. Then we had a break to the upside. So now your trading range is between this low and this high. So everything that is going on between this low and this high right here is inside your trading range. And it continues every single time we break structure. So your last bearish So your last bullish trading range would be from this low to this high after this break of structure. Now, when we have a reversal, so this means that price is breaking structure to the downside right here, we're gonna have right here what people call a change of character, or you can just call it a break of structure to the downside. So right here we have your change of character. So what does that mean? This means that your trading range shifted as well. Now it's no longer from this low to this high. Now you have a new low right here and the high stays the same. When you have another break to the downside, now you have another break to the downside. So now again your trading range will shift. Now this will be the new low and this will be the new high. If you do it in the real market, we can as well first of all densify your overall structure. So in this case, it's really easy. You're going to densify your highs and your lows. So as you can see right here, if we start from this area right here, we had a high, a low, a high, a low, high, low. Then right here we have a small low, high, high, low, high, low, high, low, high. Okay, if for you this is too hard, you can go as well, click here and click online. That way you have your highs and your lows easily identified, and you always take only the external ones. So this one, the highest and the lowest ones. Don't include all of them, if not you're gonna get too mixed up. So when you're gonna have your highs and your lows, this is when you can as well see your break of structures and then identify your ranges. So your break of structure will be from a body closure to another body closure. Some people identify it as well from a wick to another body closure, but it's never from a wick to a wick or from a body closure to a wick. Your break of structures are always from a body closure to a body closure or from a wick to a body closure. So for example, right here have multiple break of structures. As you can see, we're pushing to the upside. So right now I'm mapping the structure, and every single time you have a break of structure, you have a trading range, right? So when this happened, we had this low and this high. Then we had another break. So now this is now the new low right here, and this is the new high. Then we have another break. So this is the new low, this is the new high. Then we have another break, so now this is the new low, this is the new high, and you just follow the price action. So the low will always be the lowest point connected to the high that has been broken. Don't make the mistake of considering this low right here, because this low right here is not the lowest point in the previous trading range. This is the lowest point exactly right here. So same thing, when you have a break of structure to the upside, this is the high, this is the low. You have another break, this is the high right here, this is the low. So this is really important. Okay, now what's gonna happen when you have a reversal? So remember what I said, sometimes it happens that price will create a reversal. So in this case, let's see what happens next. Right here we have a break of structure to the upside, break of structure to the upside, and let's go in time and go back here. So the last break of structure to the upside happened right here. So our current range would be from this low to this high, right? But let's see, this is your low. As I'm identifying with body closures, what's gonna happen next? Bam, we broke to the low. So this is a beginning of a reversal. This is really important. First of all, we're gonna identify how to identify reversal. So right here we have a beginning of a reversal. This doesn't mean that the reversal is confirmed. This is really important. This doesn't mean that the reversal is confirmed for one simple reason. This might be a liquidity sweep. What do I mean by that? Is that right here we have a lot of resting liquidity below here, below here, below here. We have a lot of resting liquidity in this area. So this might just be a liquidity sweep, and it might just sweep everyone out before pushing to the upside again. So to confirm a reversal, you need another break. So basically your first initial break is not enough. You need another break of the new range. So we need a pullback and another break, and you need another break of the old range. So this means this was the previous range. We need this low being broken too. This is how you're gonna confirm your reversal, and this is how then you will be able to look for some sells. So let's see, for example, right here we had a little pullback here, here, and here. So now our reversal is confirmed. However, before that zone, it was not a good idea to look for reversals, because as you can see right here, this might have just been a liquidity sweep, but now as we broke multiple structures to the downside, now it's more confirmed that we're getting bearish. So now how to trade the reversals compared to the continuations. So when you're looking for a continuation, it's quite simple. Overall, you know, you're gonna have your overall structure right here, and you're gonna look for some valid points of interest in the overall structure. So you're gonna wait for the POI mitigation, your confirmation, and your entry. If you want to know my exact entry model and my exact SMC strategy, don't hesitate, I have a video. I will put the link in the description to watch my exact model about my strategy. Now, if you want to trade the reversals, it's more hard for one specific reason, but it's pretty much the same thing. So overall, let's say we're bullish, but then price starts to get bearish, okay? If you have only one break of structure to the downside right here, so now your range is from this high to this low, this is not strong enough for you to be looking for some sells, right? But when you have another break of structure, now it's strong enough for you to be looking for some sells, for some reversals, okay? For some reversals. So same thing, you're no longer gonna be looking for some buys, you're gonna be looking for some reversing trades for some sells. Why? You have this confirmation, and even if you have another break to the downside, this is completely a change in the trend. If you don't have the confirmation on the left, at that point, it still might be a trap. So what I recommend you to do is just right here, lower your risk, okay, for our POIs, for example, right here. And then let's say price tap into the POI and you have your entry confirmation. You can look for a sell, but with lower risk. But if it overall breaks structure to a downside, this is when your market is now no longer a reversal, but overall a continuation in the opposite direction. So for example, let's do a little quick example. So in this case, as you can see, we are on NAS and overall we're bullish, right? So if I go back in time right here, my last break of structure to the upside was here. So I can densify my valid points of interest on the 4-hour right here and right here. And I will be looking for some buys. So we'll be looking for some continuation. So let's see what's gonna happen next. As you can see, we tapped into this POI and we reacted perfectly. However, let's say I go on another pair and I go on gold exactly right here. We can see overall on gold, we were really bullish. But more recently, we actually broke structure to the downside. So let's see, and let's go back in time right here. So we are overall bullish, as you can see on gold. The last bullish range was here, but we are now changing the direction to the downside. So this is a beginning of a reversal, right? We are not trading this beginning of a reversal yet. We need another break here and a break here. If we have another pullback and a break, we can start looking for some sells. If we have the overall two ranges broken, then we can change the direction and look for overall trades. So let's see what's gonna happen next. We had a pullback and we had again a break of structure almost to the downside, bam. We had a break of structure to the downside here. So now this is our new bearish range right here. So same thing, I can straight away look for some sell POIs and then I can look for some sells. As I have this break and this break, now it's stronger to look for some sells. So same thing, I identified my 4-hour POI. I can go on my intermediate time frame for my confirmation and let's see what's gonna happen. As you can see, this POI reacted perfectly and we had a trade. But before I have this second break of structure, I'm not looking for reversals and for reversals yet because it's too risky. But if I have one break, two break, three break, that's perfect. So that's it, guys. This is how you can trade reversals and continuations. So remember, you continue by identifying your continuation when you follow the trend, and when you have a reversal, wait for 2 breaks before entering in the reversal. That way you will avoid a lot of losses and a lot of liquidity sweeps. So if you enjoyed this video, don't hesitate to like and subscribe to For Traders, and if you have any questions, don't hesitate to ask them in the comments and I will personally reply to you. So yeah, guys, have a nice end of the day and see you soon for a new episode of Koshkah'S Academy of Trading.